I think the question that I think people need to ask themselves is, why are central banks accelerating their gold purchases? Well, especially since it was reclassified tier one. And I would say, to me, the answer is that, this path that the West is on, this debt path that we are on, where in the month of October we printed or accumulated $500 million worth of debt. It took us nearly 200 years to do that the first time. We did it in 4 weeks. This path that we're on is not sustainable. And I think that many of the central banks around the world know the playbook, and they are preparing for a new regime, a new monetary regime, where I think it's once again backed by gold.
It's been a couple of days, but global gold investors are still reeling from the latest price jump that took the leading precious metal from $2,071 to a new all-time high of $2,150. Though the sharp and sudden increase was soon followed by a sharp retrace back to around $2,030 per ounce, prominent analysts and bullion dealers like Miles Franklin's Andy Schectman believe this is just one of the early hints of the massive rallies coming in 2024. According to Andy, who has been warning about similar scenarios for a couple of years, this almost unprecedented volatility in the gold market proves that everything he has been warning us about is now quickly unfolding before our very eyes. Andy's central message over the years has been about the debt crisis in the United States, the world's largest economy and home of the world's reserve currency, but easily comparable to another banana republic when you look at its massive debts. The United States has accumulated a national debt of $33.892 trillion. That is almost $1 trillion in debt accumulated between now and about 2.5 months ago, when we hit $33 trillion for the first time in U.S. history. This does not even account for the equally massive off-balance sheet debts. Andy explains that the world sees the current state of the U.S. economy as an opportunity to escape the oppressive and hypocritical rule of the West. This is why international alliances and organizations like BRICS, OPEC, Shanghai Corporation, and others are making obvious moves to reduce the dependence on the dollar. According to Andy, we are moving from a dollar-dominated global financial and economic system to a more stable system that will be backed by gold and other commodities. We will now bring you clips from Andy's recent interview with Dr. Kia Pruitt. Please watch, share, and like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks, and enjoy the video.
I don't remember per se where we left off.
Okay.
It's been a little bit since we've been together.
Yes.
But I will tell you that a lot is happening. The balls are spinning faster and faster and faster. And a lot of the things that I've been talking about for the past 3 years, almost 4 years, are coming true. And I don't say that to prophesize myself or to hold myself up as a soothsayer. I say it in the respect that it's very concerning to me that what I have seen happening going back to 2019, 2020, making almost 1,500 videos attesting to it as document, is coming true. You see a price of gold over the last few days that has gone parabolic. I woke up Friday morning, saw it was going through the roof, ended the day very nicely. And then yesterday, Sunday, when the market opened up in Asia, we saw gold open up as high as $2,150 an ounce.
Whew.
It's fallen back by over $100. Right now we are at $2,030, which is still, if not for yesterday's spike, would be an all-time high. And what's interesting about that is that we saw in a span of 2 hours today, 129,020 gold contracts dumped in the span of 2 hours. That's 12.9 million paper ounces. There were 40,000 silver contracts, or 200 million ounces dumped over the same time frame. When you realize that there's about 850 to 1 billion ounces mined in a year globally, for someone to dump 200 million ounces in that period of time would be the stupidest thing you could ever do. When you dump that kind of supply onto the market, it is done as a drive-by shooting. It is done for effect. It is all paper. It is a paper derivative. It is not the real thing, but it is done to overwhelm the bullishness of the market and turn it upside down. It's the cartel banks that are holding down the price, and it's getting away from them. But it shows the desperation that they are employing, to where, if you wanted to sell 200 million ounces of silver, or 12.9 million ounces of gold. What is 12.9 times? You're talking 2,580,000,000 ounces. I believe that's about right. Or $2,580,000,000, 12.9 million ounces of gold, like that. If you're going to dump that kind of gold onto the market, you do it slowly over time so as to maximize your return. To dumping it all at once, all it does is guarantee the worst possible settlement. And the same thing would be true for silver. Whoever would have done that as a trader would be shot and fired, and probably in that order. They'd shoot them and say, you're fired. You don't do things like that. You do things slowly over time to maximize the return. Dumping it is done for effect, and it had quite an effect. But let's think about this. Since October 10th, when gold hit $1,830 an ounce, marking the low for quite some time, and silver $21 an ounce, we've seen it rally. Even today, after the pullback of $100, we're up $300 an ounce $200 an ounce in gold since October 10th, and up $3.55 in silver since October 10th, with the pullbacks that we've seen today.
According to Andy, the pullback from $2,150 back to $2,030 is to be expected. Markets go way up and come back when they hit resistance. But this does not mean we've seen the end of this rally, both in silver and gold prices. Andy is certain that bigger and better things are coming in 2024. During his discussion with Dr. Kia, the Miles Franklin president gives an update on the de-dollarization efforts by countries like Saudi Arabia, China, Russia, the United Arab Emirates, and Iran. Andy points out that Saudi Arabia and all OPEC countries have joined the Belt Road Initiative, which now represents nearly 75% of the human population and about 50% of the global GDP. Saudi Arabia has also joined the Shanghai Cooperation Organization, the world's largest regional financial and military organization. Outside of joining all these organizations, Saudi Arabia is also making a point by conducting trade with countries like China without using the US dollar. Last month, the People's Bank of China and the Saudi Central Bank signed a local currency swap agreement worth 50 billion yuan, $6.93 billion, or 26 billion Saudi riyals. Both countries continue to sidestep the traditional method of settlement using the US dollar and the SWIFT system, which seems to be quickly becoming a norm for these countries. Let's get back to Andy's video.
So you have a situation where 80 to 90% of the world is not going green. And we are forcing this agenda. We are not prepared for it. We don't have the commodities needed to meet this agenda. And at the same time, we are pushing the world away from us. And the ramifications will have a profound effect on the settlement value of the dollar and ultimately on its reserve status, as all of these trades and all of these deals that are being done until they issue a common settlement currency for the BRICS are being done in local currencies, these currency swaps, and those all used to settle in dollars. So less demand for the dollar means everything priced in dollars, like gold and silver, like oil, like everything, goes higher. And what we saw, I believe, this weekend is a precursor to what we can expect to see in spades. And the West this morning pushing back and dumping huge amounts of paper gold and silver, not the real thing, the paper derivatives, onto the market to once again artificially suppress the price. But all that will do is increase the demand and delay the inevitable and make the final outcome that much worse. So these are very interesting times. And when you see a dip like this, it's great to buy it. When you see something shoot up like that, it's better to hold off, let it cool down. Let's see what happens. But this is going to be a very volatile time as we head into the 2024 elections. as the $115 billion that the Federal Reserve has lent out to many of these borderline, basically technically insolvent banks who have almost $1 trillion in unrealized losses, has to be paid back in March. And we've now crossed the 130% debt to GDP ratio. That line is a line that no country has ever crossed ever in history without defaulting, ever, whether it be by outright default or by hyperinflation. Over the past couple of weeks, we're seeing more companies decide to join the BRICS nations. And I think it's important to realize that there's 27 countries that have applied formally to join the BRICS, and another 22 or 3, total of almost 40 that have expressed serious interest. You have Pakistan, who just formally applied to the BRICS. You have Venezuela, who in and of themselves isn't that much of something to worry about, like all of these countries. But they have 17.5% of the world's total oil reserves, known oil reserves. Nigeria formally applied. So I liken all of these countries applying and all of these things happening, de-dollarizing, deals struck outside the dollar, currency swaps, all of this stuff used to settle in dollars, to an axe on a tree. Little by little by little by little by little. It's called logarithmic decay. That's how it's kind of like going over the falls. You're on a river, you don't know what's in front of you. The pitch starts to slowly decline, little, and bang, all at once. Where are we on that? I don't know. But I will tell you that whether we're talking what's going on here at home, socially and morally and spiritually, economically, whether we're talking about the dollar's reserve status or the way that we're viewed around the globe, I think logarithmic decay is a great analogy. Little by little by little by little, and bang. That's how Hemingway went broke. Little then all at once. And that's what you're seeing. Each and one of these things is another piece of the Jenga puzzle.
It is happening. The constant manipulation of gold and silver prices might be discouraging, but we cannot stop stacking as much as we can because there will be absolutely no warning when the big bang comes. It's just going to happen as swiftly as this rally, and everything will be forever changed. Please share your thoughts on Andy's interview, the recent gold rally, and Andy's predictions for 2024. Also, ensure you like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks for watching.